What's up, traders? King Dudu right here. Okay, so in this video we are going to be discussing on how I blew my first account. Okay, so I started like every other trader. I went through everything every other trader went through, and I blew my first account just like almost every other trader. And in this video, I'm going to be discussing how I blew it, what I did, and how I learned from my mistake and took the right path to correct my mistakes. And here I am trading forex full time. So let's get straight into the video, right? So I am back in 2020 when I first heard about forex. First, I went into stocks first, and I started learning things about stocks, financial market, and boom, I heard about forex, but I was misinformed because I went first to start looking at binary um, apps like IQ option and the rest. So where we were meant to trade stuff like commodities, stocks, forex, indices, but under a given time period, you're going to set the timer, blah, blah, blah. I cannot remember vividly, but I was doing that and I was like, wow, I like this. I could make money from this. I felt smart. I was trading demo until I posted a screenshot on my WhatsApp status back then. And a friend that has been into Forex already saw it and was like, bro, this is not Forex. I said, it is Forex. You don't know what you're talking about. I said, bro, this is not Forex. Go and download MT4 and 5. I went to download MT4 and 5. It wasn't looking nice. Like it was not user friendly. Back then I was using an Android phone, so it looked very, very unfriendly, very boring, Or like I prefer the app. You know how IQ options and the rest, how they make their apps, how they make their app to look very user friendly, to make it look very nice. Okay, so that people can really like it and get to trade with it. But MT4 and 5 were looking boring. So like I said, going online on YouTube, and I saw that every other trader had every other trader were using MT4 and 5. Then I watched a channel that talked about indices. Yeah, indices. What kind of indices? I mean synthetic indices. And after that day, the guy was teaching on how to catch spikes. So what's a spike? I said digging deep, trying to know this, blah blah blah. And then I happened to get a derivative account and I was trading indices at that time. I liked how it spiked and everything. I said, okay, boom and crash. If I can catch 2 ticks, 3 ticks, I'll run away before a spike comes. Simple. I can do this, So then I funded my derivative account to $10. Then I had a friend that we both were doing this forex. We're always doing business together, not really together, but we always tell each other update on the new business we are doing or the new, because we're all struggling to find financial freedom. So I told this person, I see what's about for, I see what's up before that account, it's synthetic indices. You can trade it anytime because there is nothing like time session. As you can hear, synthetic, it's man-made. It's run by deriv.com binary. Okay, so it's not anything real life. It's just emulating how real life market works, but there are a lot of manipulation there because it's controlled by people that live off your losses. Okay, so I funded the account $10. My friend funded I think $20, and then boom, we were trading that night. We know nothing about forex strategy. We don't know anything about risk management. We don't know anything. All you want to just do is want to just place a buy, and then if that those for crash 500, crash 500 is always going up, trade spikes down. So if we get 2 ticks up, we close our position, we buy again. If we get 2 ticks up, we keep on doing that. I grew my $10 to $20 just that night, and then she grew hers to about $30 or so. And then we kept on still trading. We want to make the whole money in the whole world. Before you know, boom, one spike hit her hard. She was like, hey, spike has hit me. And we're chatting, we were online, talking on WhatsApp. Spike has hit you. My own hits me. Boom. Before you know, more two spikes on our position, like having more two spikes in boom and crash. For those of you that know about boom and crash, the 1 minute spikes happen in a minute. Like once it's 1 minute complete, just the same way the ticks form. Once it's 1 minute, a spike as long as whatever, it depends on how they want it and how the market, they are pushing the market direction, the spike comes, and then we're not using stop loss. We don't even know what stop loss. We open trade, we will say blue, we close it just anyhow. So we lost our accounts that night. We slept very depressed and sad. Get disappointed. Woke up the next morning. What I was thinking was revenge. I will make my money back. I will make my money back. I just have to phone my last $10 again. I did, and I blew it. Depression heightened. So I was asking myself, so there's no legit way to make money easily. So I started thinking. Till what I did was that I happened to get to ask some certain people that have been in the game before me that were somehow, they're not really close friends though, but we were friends from school. And then I asked him, he was ahead of me in forex. Shout out to Group Papi. Yeah, that's Group Papi back then. We were not much of friends, you know. We're classmates, we went to the same school, but then he said this whole forex thing before me. So I asked him, said, bro, what's up? What's the strategy? Say, you're trading and you don't know what's the strategy. I said, what's the strategy? I told him, no. I told him I was about, I told him I was about funding my account too. He was like, okay, do you have a strategy? I said, what's the strategy? He said, really? I don't know what's the strategy. I was like, what's the strategy? That's how my eyes go open. I went online and started searching. But the kind of YouTube content I got, because I was trading synthetic, were all those South African scammers that were trying to sell indicators online. So what I saw as strategy was indicators piling up upon indicators, like 10 indicators, 12 indicators, 5, 4, 3, 2, any number piling up to see if this one crosses over this one, if Ichimoku crosses Bollinger Band plus moving average and RSI at 70, you would sell. All those kind of bullshit. MACD crosses with Ichimoku, all those kind of rubbish, you know. They now tell you that they have a secret one that works forever. It doesn't stop working, and it just $100 from $50. When you go buy it from them, you buy nonsense and it stop working in the next day, or it doesn't even work at all. When you disturb them, they block you. Those are the kind of setup requirements. And I tested a whole lot of strategies. Everyone went as far as testing a whole lot of EAs that blew my account, prophetic robots, blah blah blah. All of them BS, you know. So that was when my eyes opened. A guy was telling me, go back, say, come to currency market. You always see your time with this shit. I refused. I said, derivative will make me more money, synthetic indices will do this, will do that, blah, blah, blah. And I blew my account. I was frustrated until I came into the forex market. Then I started trying to learn. I thought it was all about fundamentals, just like so many synthetic traders will say. And forex is which fundamentals? I barely look at news. I just make sure I keep to my technical rules. I barely look at news, barely. Even if I do, is to avoid certain volatility. I like to say, okay, there's FOMC coming, there's NFP coming. I don't want to be in any trade by this time because of the volatility. Finish, but not to trade in news or something. So meaning you can be a forex trader and not trade any news. Okay, not trade any news. You know, you can be a forex trader and just focus on technicals, and you still be profitable. You can be a forex trader and just focus on the fundamentals. You can still be profitable. It depends on what kind of trading suits you. You know what I'm saying? So thereby I started learning price action, line, price action, blah blah blah. You know, and then I came to download many kind of PDFs that talks about chart patterns, support and resistance, candlestick confirmation. That was what I was doing, and that was how I started my journey as a forex trader. And today I do full-time trading, you know, trading smart money concepts, because I found about smart money concepts a long time from when I was doing my I started my price action. Okay, the truth is that while I went from price action to SMC, it's not because I myself okay, it's not because I was losing in retail, sorry, price action. Because many people are moving from price action to SMC in quantum because they feel they're losing because of their strategy. At first, I thought price action was wrong and blah blah blah, and it's not good. But the truth is this: every strategy is profitable. Okay, every strategy can make you money. Every strategy can do what can make you money. It all depends on your psychology, your risk management, blah blah blah. You know so many things. So many things affect your trading. So many things affect your decisions in the market, not just strategy. Okay, not just strategy, because you can get somebody trading indicators still profitable, trading price action, SMC, all still profitable. What you should know is that there are three core things that makes you a profitable trader: psychology, mastering your system, and risk management. These are the three core things, and you have to be A1, okay, excellent in all of the three. You should not slack in your system. You should understand your system in and out. You should know when you're not entering any trade. You should know when things are clear to you. And you should not be panicking when you don't have any setups. Okay, like this week I've not traded, and I tried trading today, and I didn't like what I saw, so I stayed out of EU. Okay, that's it. You need to trade what you see. If you don't see it, you don't trade it. It doesn't matter how long the market sometimes will provide more opportunities for you in your strategy. Sometimes you get it scarce. You just have to be obedient and follow process. Because if you want to start, okay, I'm looking for a strategy. I'm looking for a strategy that they call it. I'm looking for a strategy that will give more entries in a day. Strategy that will give more entries in a week, or a strategy that will give more entries in a month. You will find out that you actually not get what you're looking for. Reason is because you want more you want more entries in a month. The fact in the market is the more time you trade or the more time you're exposed in the market, you are exposed to higher risk. So if you're trading 10 times a day, you're exposed to risk more than somebody that is trading 2 times a day or 3 times a day. So you shouldn't be scouting out, okay, I'm looking for strategy that will give me multiple entries in a day. No. Or I'm looking for, I want to add many pairs to my watch list, so I'll get entries in a day. No. What is that going to do to you? It's going to distract you. Looking at many pairs, you start having headache, you start feeling tired, fatigued, because you have been trying to look at the chart, trying to catch that move, catch this move, that one is moving. Oh, I'm not getting this one. I'm catching, I'm not catching. Before you know, you end up missing trades, getting frustrated, looking at charts all day, getting red eyes on our screen. So the whole thing here is the keys to profitability is you getting a system. First of all, choose a system that works like that fits your personality. Some people will be swing traders forever. That's what they can do. That's what they will specialize in. Some will be scalpers. Some will be day trade, inter-day trader. Depends on you. So get a mentor, learn how it trades, stick to it, master it. You don't waste your time jumping from strategy to strategy. You don't waste your time doing things that are not consistent in the market. When you think about forex market, the next thing comes to mind is consistency. You have to consistently be doing one thing to track your result, or else you go out there and tell somebody I've been trading for 2 years, 3 years. That's not true. You've been wasting your time, roaming around, quitting, coming back, doing a whole lot of stuff, and you call it all 2 years of trading, or 3 years of trading, or 4 years of saving days. No. Anybody that's been consistently doing a particular stuff will surely see results. It doesn't matter the industry you are in, as long as you consistently keep doing something and you try to be an expert in it, you actually make good money from it in the long run, no matter the industry. And the forex industry won't take you that long like every other industry. Okay, you just have to get one system, master it, know the ins and outs. That's one. 2, psychology. Be disciplined with it. Do not enter when it says no. Do not trade more than so time a day that you planned. Do not trade other pairs and not your pairs. Always make sure you enter when it is like when you have seen your confirmation, you enter. You know what I'm saying? Like you really have to know all these things, like put all these things to play so that you get the best out of. So then risk management, you always want to make sure you risk a particular amount of money or a particular percentage of your account. I repeat, a particular amount of money or a particular percentage of your account. I don't see it sensible you risking pips. Okay, I'm risking 6 pips in every trade. Like, what the hell? In Euro USD, 6 pips is larger in distance than how 6 pips is in GBP JPY, than how 6 pips is in US30. So what's up? So you want to place a trade because you want to risk 6 pips, you put your stop loss in a place where you're not supposed to put it because you want to risk 6 pips by force. Or because you want to risk 6 pips, you instead of you to enter somewhere, you enter another place that is not supposed to be so just because you want to risk 6 pips. No. Always set your stop loss according to the market. Stop loss and take profit should be completely dynamic. You should not be rigid with that. Your stop loss should be completely dynamic. What should be static is your risk management on that account. Now, on your main account, you should be risking what you can afford to lose. I'm not 1% or 2% or 0.5. No. Don't follow the crowd. If everybody is risking 1% and you want to follow, but when you lose 1% of the account, you start crying, you start feeling bad, you start getting suicidal thoughts, then you're not yet ready to risk 1%. All of this comes with confidence. As a beginner trader, if you know you're struggling to still get consistency in the market, then risk what you can. You know, if you lose this, oh, nice, there's no problem. You shouldn't be thinking about money. If you need money, you go get a job, or you learn or you get a skill, or especially if you get a job, it will be best for you, a part-time job where you can do, so that you can also trade and then do the job part-time, you know, so you can pay your bills, than trying to force the market to give you money when it's not ready. It's impossible. Okay, you can't force things. You always have to wait and see. So you should be able to risk what you can afford to lose. It could be 2%, it could be 1%, it could be, but you know that if I lose this, I won't get angry. And if I risk this and I place a trade, I won't be forgetting if the trade is in drawdown, you know. So it all depends on you. Risk what you can afford to lose. And if you don't know how to do correct risk management, I think I'll be uploading a video about risk management soonest. Yeah. So watch the video, learn how I do my risk management calculations. It's more like a calculation. Okay. You have to understand it. Me, I risk pips, I risk percentage if it's a funded account. If it's a big account, I risk percentage. But if it's a small account I'm planning to flip or I'm trying to raise to another figure, I risk based on money, right? I use money management. So let's say I'm trying to flip a $200 account to whatever. I'll tell myself, okay, I'm splitting this $200 to 3 because I want to give 3 different tries on this account. So the first, I'll split it into 3. That's about $70 or 65 or something. Let's say $65 times 3. So the first trade, I'll just do the same thing. My real setup, when I see it, I just enter the trade. The same thing I do, but just at this time I'm risking $65. So when I risk $65, and let's say I will make a profit of 1:3, I'm going to make 65 times 3. You see that $200 has stopped up. So or I get a 1:4 trade or 1:5, 1:8, I'll be able to flip the account. So risking with money when you're flipping accounts is more reasonable, but when you're with your main account or a prop firm account, you learn how to risk in percentages and be consistent with it. Do not say, okay, I'm taking this trade and I trust the trade. I trust the setup. So I'll increase my risk. That's BS, you know, because you cannot ever trust the market. You're a trader and you're meant to see your setup and trade it. Don't see your setup, you do something else. All right. So I'm coming to the end of this video. I'm sure you guys took 1 or 2 value out of this video. All right. Thank you guys for watching. Support this channel by subscribing, turning your notification bell on the channel, and liking this video. I appreciate your support. Yeah, goodbye. See you next video.